Welcome to Market Matters. I'm Khoo and I'm joined by Sulhi Azman, and we're looking at some companies in the news. It's Tenaga Nasional. The shares were suspended for the whole of today. They last closed at $13.49, and now we know why Tenaga Nasional was suspended, because the Energy Ministry has just announced that there will be a lower tariff rebate for the first half of next year, which effectively means that Malaysians will pay more for electricity from January to June 2016.
Yeah, correct. And you see, according to the announcement today that we have received from our colleague Charlotte, the lower rebate going to be paying from 2.25 cent currently to 1.52 cent for the first 6 months of next year. Then that, Chuang, doesn't sound too good, isn't it?
Yeah, essentially that means, I think what this means is that the tariffs remain the same, but the rebates to us as a result go down. So our net cost as consumers is that our electricity costs go up. And so I guess the message from the government is don't consume as much electricity, but it's going to be tough, especially for the industrial sector, because, and I'm not sure what the finer details are, but for example, if you're in manufacturing, if you're in the industrial sector, you do use a lot of power, and that's going to cost a lot of hurt and pain.
Companies like glove makers, for instance, Supermax, Sons, and Top Glove, they are actually a very heavy user of electricity, and usually when this sort of news comes in, right, they are the one who will be coming out or feeling the impact of this electricity hike, because I think that makes it a substantial chunk of their operating cost.
Exactly. Well, the last tariff rise was around by 15 to 16%, happened in January last year, by about 4.99 cent per kilowatt hour, which actually meant that 33.5 cent was the old price, went up to 38.53 cent per kilowatt hour, and then there was no tariff hike from July to December last year because of the savings from the low oil prices. So what the government does is it reviews costs every 6 months, and then it announces whether Tenaga is able to adjust tariffs or not. So it's a tough one, right? Because the government wants to manage costs for the people and for the business sector, but at the same time, Tenaga Nasional is the sole distributor of power in the country, and it's also a going concern. It's a listed company in the stock exchange, so there's always a constant balancing act.
Definitely, it's a double-edged sword. If you look at the government has to weigh between the rakyat's demand as well as the demands from the Tenaga. If you look at the Affin Hwang Capital in the latest report, way back in October, they say that Tenaga's actually tariff rebate may not be sustainable for TNB. This is because the over-recovery cost may remain lower due to the higher gas prices, stronger against the US dollar LNG prices as well.
And guess what? The one thing to note about all this is that this announcement comes very, very hot on the heels of Tenaga's loss of its bid for EDRA, which is the one of DB's power assets. An asset acquisition that was not exactly popular among shareholders of Tenaga. So to wrap it all back, in terms of Tenaga's news flow, they announced higher effective tariffs, or rather announced higher effective electricity costs to the consumers on the peninsula. It applies only to the first 6 months of 2016. The last increase is in January 2014, and this comes hot and in the wake of the loss of bid for EDRA's power assets, widely viewed in terms of the market as a bailout. Now let's move along to the insider Asian stock of the day. It's YTL E-Electronics. They closed the day 1% lower, max to 53.5 cent. Now, Insider Asia like these kind of stocks because they are basically defensive, predictable earnings, cash in the bank, and zero debt. Now, the crown jewel for YTL E is the 60% ownership of 30 megahertz of the 2.3 gigahertz WIMAX spectrum, which in plain English means that this is the spectrum which YTL offers the Yes mobile platform on. Definitely.
According to the agreement, right, this spectrum is leased to YTL Communications, the sole operator of the Yes mobile internet services. And the agreement will see a minimum of 75 million ringgit annually, or 50% of the WIMAX services revenue that will be going into their coffers. And this spectrum sharing business is expected to be YTL E-Solutions' main earnings generator for the foreseeable future. I don't know. What do you think about the take-up or the popularity of this Yes
thing? It's not. It's pretty got its own market in terms of in the urban areas. The dongles are pretty good, the data's good. It's pretty fast, and they make a big song and dance about how they have coverage of the whole country and this and that. But it's a very tough business. But from YTL E's perspective, despite the small market share relatively that Yes has, that 75 million ringgit is 86% of YTL E's total revenue. The other business that YTL E does, is in creative content creation and digital advertising sales. So that comprises the remaining 15%. So why Insider Asia like the stock is because it's predictable, it's defensive, it's the latest yields of at 4 cents per share for FY 2015 is 8% nets basis, which is pretty damn good.
Very, very good as well. I mean, compared to other yields, normally between 3 to 4%, this 8% is actually what investors are looking for. And at the same time, talking about being defensive, but they also have a very strong cash pile, which nearly zero borrowings. Net cash stood at 220 million ringgit as in June, sufficient to pay dividends at least for the next 3 years.
That's not bad, and that basically means this net cash it's basically equivalent to 16.4 cents per share, which is about 32% of the market capitalization. So to wrap it all back, and of course this is a company which is 74% owned by YTL Corp, which is also in control of YTL Communications. To wrap it all up, nominated by Insider Asia as a defensive yield stock, the crown jewel is the 60% ownership of the WIMAX spectrum sold under the Yes Mobile Telco brand. And the asset ownership gives them a minimum 75 million ringgit annually, which is going to be the main earning source for the foreseeable future. So that's YTLE for you. We're going to wrap Market Matters right now. Of course, I was joined by Azman, and I'm Khoo. For more stories, go to theedgemarkets.com or pick up the print copy for more relatively respectable newsstands around the country. Thank you for watching. Good night and good luck.